welcome. You have tuned into Closing Trades on ET Now. I'm Srishti Sharma and with me Cheryl D'Souza, and we are joining you live from Motilal Oswal studios. But as we are in the thick of the earnings, and M&M did report its numbers this time around, so let's go across and listen in to the management itself.
Not just the SUV revenue market share, but also the LCV, less than 3.5 ton market share, which is now 51.9%. We've crossed the 50% threshold on this, so up to 30 basis points. And for farm, while market share has increased, farm machinery revenue is up 12% as well. As I mentioned, we shall talk about achieving full potential now for Mahindra Finance and Tech Mahindra. You see the GS3 and asset under management numbers for Mahindra Finance and for TechM, some green shoots in telecom, or green shoots in BFSI and healthcare, some new deal wins in telecom, and getting back to a margin recovery path. So overall, as we have promised in the past, a consistent delivery on commitments. ROE continues to stay around 18%, which we have promised. And EPS, we had promised a 15 to 20% growth from F21 onwards. At this point, it's significantly higher than that and continues on a good trajectory. With that, I'd like to invite Rajesh to talk about auto and farm.
Hi, good afternoon, everyone. I'll start with farm, and you can see here we've had a very healthy volume growth in Q3, 20%. Exports have been up 14%. Anish just spoke about the market share, so 2.4 percentage points gain in the market share, which is our highest ever Q3 tractor market share. This gives you the trend line of where we are on the market share. You can see that we've gained through the year 1.7 share points as well. Farm machinery, again, continues to grow at a reasonably healthy rate. On a YTD basis, that's at 20%. The revenue is up 11% and the PBIT is up 29% for consolidated. So that includes our global subs. And the margins on the right, what you see is the core tractor margin, which is now at a very healthy level of 19.5%. Just to recap, core tractors is domestic tractor business plus the exports that we do from India. Plus farm machine. Sorry, it excludes power all and farm machines. We always show you this chart to show you the steady rate or the band in which we operate our margins, irrespective of what's happening to the industry. And the gray line shows you the volatility in the industry, but the ability to maintain margins. And of course, now you can see it going up to 19.5% as Q3 demand has got stronger. We expect the industry to grow at 15% plus in Q4, which will take us to an annual expected industry growth of around 7% plus. And there's several positive factors that we are seeing which are enabling that, one of which is the reservoir levels, which are at a very good level, 16% over the long period average. The Rabi sowing has been pretty smooth. It's at 103% of the Rabi area has been sown.
All right, that was the management of Mahindra Mahindra talking about the quarter gone by for them. But let's take a look at Mazagon Dock. Actually, that one has reported its numbers a short while ago. A sharp spike that we've actually seen in Mazagon Dock stock price at this point in time. There you go. Now it's settling down about 0.8% uptick. But let's talk about the markets and the trajectory going ahead. We have Daljit Kohli who's joining us. Along with Daljit, we also have Kunal Bothra as well as Naresh Mirani. Very good afternoon to all three of you. And Daljit, let me come first to you. And yes, it's been a while that we've had a lot of hopes riding on the banking and the financial space. Now people have been talking of the fact that they are one of the sectors where the valuations have actually corrected quite a bit. Good time to look at them. And today you had the big cut coming in from RBI or rather the MPC as well. So how does all of this augur well for the financial sector?
Yeah, good afternoon. Thanks for having me on your show. I think this was much anticipated that we will probably start the cycle of rate cut now. Uh, and RBI has delivered on that. Although with just 25 basis point, it is the start of that. Market was looking at it that probably with this lot of uncertainty, especially the global uncertainty, some kind of help from the RBI would always be welcome. So I think this is good. Now, what this will help for the financial services sector is that probably the cost of funds will ease out slightly. But the bigger concern for the sector has been on the deposit mobilization. I think that has still not been tackled at all. So probably that will take some more time to come across. We have seen that in this quarterly numbers also till now, whatever financial companies have come out, asset quality is now very much stable. Growth is also almost in line, 14-15% kind of growth. The issue is about the cost of funds and therefore the ability to draw the deposits, etc. So I think that concern will still remain while the sector has seen valuations come off sharply and now they are probably one of the most attractive ones. But as a fund house, we are still not buying any of these financial services companies except the power financiers because there we see that the sovereign guarantee is there and there is a clear trajectory of growth there and not too much of issues on asset quality. Barring that, we are still waiting for this issues on the deposits, etc., to be resolved. But we are turning slightly positive from earlier, totally ignoring the sector.
Right, you have actually, especially this REC, PFC, IREDA, all of them in focus in today's trading session on post the policy presser where the RBI governor actually mentioned that the earliest timeline by which the project financing guidelines will be implemented is March 31st, 2026. So on back of that, take a look at REC and PFC in particular because both of these counters were in focus and they both actually saw an uptick also post that sort of announcement or sort of commentary coming in from the RBI governor. But Kunal, what has exactly happened in the markets? Because post 1 o'clock, we're back near the day's lowest point. You have a sharp decline coming in the markets from the day's highest point. Is it that 1 o'clock mayhem or scare in the markets?
No, not really. I think this is one step back, two step forwards for the markets. I would probably believe that today's correction could be an indication of a potential opportunity for traders who have been missed out, who've been missing out, and have been wanting to buy, in the anticipation that maybe there are three major events which are lined up for the markets. And now that all three of the events or major events of the markets are behind us, I would believe that we should settle into a very steady kind of an uptrend mode. Yes, there could be some bit of volatility like what we've seen today, but I believe eventually the market should settle back into a trend. Now, the mix of the sectors, the kind of stocks which have been rallying, and then the kind of stocks which have corrected in the last couple of days indicates that the tilt is more towards the large caps, and that tilt is still maintaining for the overall markets. So when you have such kind of a scenario where large cap stocks, they generally move first, give a strong robust price action, and then eventually come back into a zone of consolidation and no major price correction to these large cap stocks, that generally is an indication that the markets are waiting for the next leg of uptrend. I would believe that this could be a good opportunity for short-term traders to go into a buy or a contra buy on the indices.
All right, so that's the take coming in on the index front, that you can go for a contra buy at these levels when it comes to the index movement. But with this, viewers, it's now time to slip into a very short break. Don't go anywhere. We'll be right back.
Welcome back. You're watching Closing Trades right here on ET now. Yes, it's earnings season, thick of the earnings season at this point in time. You have Balrampur Chini that's just reported his number flashing on the bottom of your screen right now. The stock is down about 4%. You have the revenue that's come in lower by about 3% or so. You have the PAT that has seen a knock of about 22%. If you look at the EBITDA, it looked pretty okay for Balrampur Chini. But let's see the numbers in details. Looks like, yeah, the numbers are lower than what Wall Street was estimating, and that's one of the reasons why the stock is taking a knock of about 4% as we speak right now. Naresh, good afternoon. Let me come to you and let me ask you about these commodity-oriented stock. Today, the steel sector is having a very good run given the fact that we are actually extrapolating from what the ArcelorMittal's con call was, the fact that they are expecting the year to be better off. So it's sort of a rub-off effect coming in the steel sector. But when you talk about the commodity-oriented stocks, there are a lot of small pockets. You have oil and gas, you have steel, you have those including the base metals, or for the matter of fact, sugar-related stocks. So when you have to bet on this entire commodity-driven theme, which one would you bet on?
So if you look at the commodity space, what has happened in the last 1 week is you've seen copper go up. You've seen aluminium stay flat. Even steel prices have not gone down. And the stock prices have already corrected 25-30%. So the spot which still looks interesting is aluminium place, which is where Hindalco and Nalco come in. They've both corrected from the top. And aluminium prices continue to be at 2600, 2650. Sugar, on the other hand, has been a weak trend across the board. So if you look at Balrampur, the stock has corrected quite a bit. But the other names like Dhampur, etc., have continued to hit new 52-week lows. Balrampur has been relatively better. South Air would still avoid the whole sugar space, wait for it to make a base after this correction, not preempt the bottom.
All right, so that's the take coming in on commodity-oriented counters. Remember, I just spoke about the steel counters because the metal index is on a tear today. You had ArcelorMittal saying that despite at a cyclical low, they're expecting demand to gain momentum soon, and also boost to Chinese real estate is giving a flip to these metal counters. Ashesha is here to exactly tell us what are the details, what should you watch out for when you're betting on the space. Ashesha, over to you.
Metal stocks are clearly gaining in trade today. Nifty Metal Index, as you mentioned, is soaring up over 2.5%. And some of these steel majors are bucking the trend in today's trading session. Jindal Stainless, Tata Steel, JSW Steel, Welspun Corp, all of them some of the biggest gainers on the Nifty Metal Index today. Now, several news pieces over here, and the first most important one is ArcelorMittal's commentary that has come in with respect to demand environment in 2025, where they believe that we are perhaps at cyclical low and that demand could inch higher in 2025 as compared to what it was in 2024. In fact, they say that world ex-China is expected to grow in the range of 2.5 to 3.5%, which is a positive for steel demand going forward. Inventories have also replenished, which means near-term demand environment for steel is expected to be very positive. Apart from that, Chinese property stocks are also rallying in trade today, and the reason is Chinese government's focus and the fact that they've reiterated yet again that they will continue to focus on building real estate investment back in China as soon as possible. Very strong words coming in with respect to Chinese demand recovery, and that is also another reason why all of these metal and especially cement stocks are buzzing in trade today. Dollar index, that continues to fall. Remember, dollar index touched that 110 mark somewhere in about a month ago, and that has now fallen back again to 107 odd levels. There's inverse relation between metal and dollar index, and hence a fall in dollar index is always a positive for metal stocks. And apart from this, several reports are suggesting that Indian steel mills will undertake price hikes of about 2,000 rupees per ton as early as February. Remember, steel prices have remained subdued for the last several months, and any recovery in steel prices will also be a big positive for steel stocks. So several reasons why metal stocks are buzzing in trade today, especially steel stocks, on the back of positive commentary that has come in from global steel major.
All right, thank you so much, Ashesha, for getting us all those details. But with this, let's move on and let's also hear out from the management of Bharti Airtel, whose con call is going on right now.
Of free cash flow last 12 months in the India business, X of the prepayments. Now, with most of the high cost spectrum debt repayment done, except maybe the fiscal 25 spectrum of 8.65%, which is again like less than $1 billion. What are the areas, where again the free cash flow may get channelized in terms of whether those are, I don't know, M&A opportunities or returns to shareholders, or you still have other debt that you think you may need to reprioritize? And second follow-on question on your comments around investments on home broadband, again versus let's say the other listed peer Jio, your home broadband ads, while they're still very strong, remain meaningfully below what they are reporting. Is there any fundamental reason as to why your numbers should not, let's say, catch up or converge with what your competition is doing in terms of home broadband and FWA rollout? Thank you.
Yeah, I think a great question, Manish. Thank you. Opportunities for free cash flow, I think, will be some amount of deleveraging, which will continue as you also pointed out. There will be a step up of dividend for sure, and that is a second area of free cash flow. And the third, we'll be selective and very prudent in any investments we make. We are looking at investments into adjacencies in B2B in some of these digital areas. Obviously, these will be bolt-on acquisitions. We haven't got anything to report. And if there's some substantial value, asset that is around, we'll keep looking at it. There's nothing really that is on the anvil, but we'll be very prudent, like we always have been. The home broadband business, I would say, is the way I would look at it, Manish, is that I would say keep looking at every quarter progress that we're making. In fact, we look at it on every day. Are we making progress? So certainly every month we are making progress. I already spoke about January being better than December and February having begun better than January. We are as dissatisfied about the fact that we are not competitively where we should be on home broadband. But suffice it to say that every month we are getting better than where we are. And I will just step back and explain to you why we've been behind on this. I think there are three drivers of home broadband. One is supply. On supply, we are matched. There's no issue on supply, whether it's home passes, and it's the towns that we rolled out FWA. The second is on delivery of value. Again, we are very competitive in the marketplace on a combination of both the price we offer as well as the content that we bundle with it. And the third is the access, which is the access to leads, access to customers using all our channels. Here, I think our focus has been on largely the direct-to-customer channel, which is the place that we've got all our growth, and also the digital channels. I think one of the things that we've done, and we've done experiments in 4 or 5 circles, we have fired up the mass retail channel. And in these circles, which were serious underperformers, circles like Northeast, circles like Orissa, we have seen substantial gains, so much so that we are now neck to neck. So I would say that we are now rolling this out all over the country. So it gives me great confidence that I think we're on the right trajectory, but it at the same time makes us all very restless that we're not still where we need to be in terms of competitive performance. So that's really what we are focused on.
Thank you, Gopal. I just will sneak one last quick follow-on question. I mean, you spent a disproportionate amount of time, or at least reasonable.
Welcome back to Closing Trades, and you are catching us live right from the Motilal Oswal studios and taking a look at the markets. Yes, we are in the red territory, but it's trying to be stabilized, or rather take a support at 50,000 odd levels when it comes to Nifty Bank. While for Nifty 50, there has been a decent recovery from those lowest points. You see the spike in the last 15 minutes or so. 23,530 is where we are at right now. But definitely the metal stocks are shining bright because it's Tata Steel that is leading it from the front, 4% higher coming in on this particular counter, followed by Hindalco as well as some of the other counters as well. But M&M is one such stock which is now almost at the day's highest point, because we were just hearing from the management itself. There was no great set of numbers this time from M&M. Nothing surprising, but definitely on the management commentary side, what really caught my eye was the tractor growth guidance, because in the Q4 of this particular fiscal year, Rajesh Jejurkar is saying that the tractor industry could actually grow by 15%, and that's a strong number to look out for. Definitely, he did also tell us the factors that could be at play for the tractor industry, but M&M drives a lot of its contribution from the tractor division. This time we have seen a 60 basis points of jump in terms of its margins, so definitely boding well for the company. But specifically on M&M, Kunal, can I have your take on this one? The stock is at the day's highest point. There are chances that analysts might like the numbers and go ahead and maybe raise the target price, but how is the technical setup looking like?
Yeah, it's one of the strongest two-wheeler stock from the entire auto arena space. And I think what we've seen the last 2 weeks specifically is a very strong bout of outperformance for M&M. So from 2,800 levels, where the stock was almost at a 2-month, 3-month swing low, the stock has come back very strongly. It's almost like a V-shaped recovery for M&M. And from those 2,800 levels, I think recently we saw the stock making a high of 3,200 plus mark. So it's been a very good recovery for M&M. Overall, I think the stock over the last 2 years or so, 1.5 year, has been going through a patch of consolidation, and this 400-point range has been the broad-based range for M&M. So which means about 3200 mark, we could be looking at an extrapolation of that consolidation. So 3600, 3500 could be a near-term target range for M&M.
All right, that's the range for M&M. But Kunal, the very next stock that I have is Chambal Fertilizer, and I have to come to you because I remember that you have been tracking this stock, and I believe in the last couple of weeks itself you highlighted as a chart buster idea for this one. So now what a move! Is it finally moved out of that consolidation mode, and what are the next levels to watch out for?
Yeah, absolutely. I think I highlighted the stock yesterday itself that the stock is getting ready for a breakout. And finally, we've seen the breakout happening for Chambal Fertilizer. This could be a very strong, breakout or a fulcrum point move for Chambal Fertilizers, because the stock breaking past about a series of major consolidation band, and the zone for Chambal Fertilizer was almost 100-point band. So which means a 20% consolidation from 550 levels thereabouts to 460 thereabouts as a resistance and support respectively. This looks like that this could be a start of a very strong major up move for Chambal Fertilizers. The good part is that the volumes in the last 2 days have been exceptionally high for the stock, and that should aid the move for the stock going forward. So my sense is that the stock should be at least up for another 80 to 100 points from this breakout point of 550 levels.
All right, so that's the take coming in on Chambal Fertilizers. Finally, a great breakout happening, and it's been no stopping for this particular stock. But let's move on. Let's also welcome Ajay Bagga, who is joining us on the show right now. Hi Ajay sir, good afternoon. It's been a while we connected. Great to have you on the show.
Thank you.
Ajay sir, help us with your take on the markets overall, and I would like to know that how much of the positives in terms of the union budget as well as the RBI monetary policy coming as per expectation you believe is now priced in, and what will drive the markets ahead, because January month has been quite wobbly. In February we are seen to be stabilizing a bit, but what's the way forward if we can have your take?
Yeah, absolutely. I'm delighted to be on your show again. Overall, if you see, two big domestic events have gone up. The union budget, I think, on balance, it was a good budget. In terms of the RBI policy, the positive was the rate cut. What disappointed the market and led to some amount of sell-off in the banking stocks was that.
All right, Ajay sir, please hold that thought. I guess we got you in quite a patchy line. We'll try to reconnect with you so that we can clearly have your take for all our viewers. But back to the markets then. It's Nifty Bank that is now scaling above. It's trying to recover from the day's lowest point. But a lot of these counters, specifically from the auto pack, are trending higher. Trent is another stock after an 8% fall yesterday is trying to recover a bit. Other than that, when we say, then definitely Chambal Fertilizer is one of the top gainers in the F&O side. Trend as well as Dixon Technologies is also making up to the list. But I want to flag off Apollo Tyres as well, because the company on the number front, you will see, has disappointed drastically. Other than that, what I believe is that given the fact that most or rather the worst may be behind for Apollo Tyres, because in terms of the subdued demand in the domestic market, the kind of inflation we have seen in the rubber prices, going ahead in Q4, the demand outlook looks quite decent, and there has been a sort of a decline in the rubber prices that could actually support the margins of the company. But Naresh, help us with your take on Apollo Tyres, because since the word go, the stock did recover from its day's lowest point. It's very close to its 420 odd support levels. How do you see this?
So the stock has actually given a breakdown of the last 1 year range. 440, 450 used to be the bottom back in November as well as June and March of this year. And we've broken below that. So unless and until the stock starts trading above 440, the trend remains weak. So it could be a whipsaw only once it sustains 440. So for now, it's an avoid. The selling has not been very sharp post that breakdown. So I would expect it to be in a range of say 410 to 440. If that range breaks, then there is a new trade to be done.
It is just it is just a bit of a bounce that we are seeing on Apollo Tyres is what Naresh believes at this point in time. But definitely, when we talk about the telecom stocks, is Bharti Airtel moving all of the way higher by around 3.5%. But one of the related companies, that is Bharti Hexacom, if we can bring up that stock, that's around almost 11% jump is what we are seeing on that particular counter. Naresh, how do you see this counter? Because we don't discuss this stock very much on the channel, but technically, how do you see the setup of this one?
New listing, just a year of data, but technically, if we look at it, post the listing, it has trended well up. 1250 is a support and 1550 is a upper band where it has made a top few times. Relative strength to the fact we've seen in the whole telecom space also, we've not seen sharper correction here. Same is the case with Bharti or even in Industars. So for now, it looks okay at current levels or on dips rather. Our dip back to 1300 and 1350 would be a buying opportunity, and upside could be back to 1550.
That's the take coming on a couple of these telecom stocks. But Ajay sir, believe that you are back with us. Please go on and help us with your take on the markets, that what factors and reasons can drive the market ahead from these levels.
Yeah, thank you. Again, some Wi-Fi issues. Overall, if you see, the budget on balance has been positive for the markets. Infrastructure spend has been maintained. The fiscal deficit goes down, which creates some amount of space for RBI to cut, and consumption got a booster. Then, as far as the RBI policy went, it was positive in terms of the rate cut, but keeping the policy stance at neutral was a surprise. We were expecting that they would move to accommodative and acknowledge that now they would be focusing more on growth rather than inflation. And then the press conference commentary where the governor justified that, saying that there's too much global uncertainty and they've stayed at neutral. That has created some doubt in the market's mind. The third factor today was no liquidity measures being put out. But I would say those are not required to be announced in an MPC. The RBI will always bring in durable liquidity. That is what he said. But I think there was some overreaction. The positive got left out in that one, the rate cut happened. Second, the postponement of project financing and LCR guidelines. Remember, the LCR guidelines meant about 10 to 15% having to be kept as a buffer, liquidity buffer by banks for internet-enabled deposits. That would have been a big drag on banks. That has got postponed at least to next year, March 2026 at the earliest. Same with project financing guidelines, where 5% buffer provisions would have had to be kept in under construction projects. That has again got postponed by nearly 14 months at the least. Those were two very big positives that got left out. I think it was a market overreaction of being quite exuberant coming into this RBI policy, that new governor, new stance, and new thinking will come in. New thinking came in terms of a very belated interest rate cut, but I think the RBI bureaucracy stuck to its heels and kept the stance neutral, and we did not see a liquidity announcement. That was the negative driving the markets downwards today. Overall, globally, Mr. Modi visiting US next week is a positive. We are expecting that some amount of defense agreements to be signed, some amount of equipment purchases to be announced by India. And already we are seeing some relief being given on tariffs on US goods. And we should see a shake of hands, which should give some amount of focus to the markets. Overall, not a great earnings season, but the next quarter is starting to look better. And with this rate cut, we will see the rate sensitives do better. So I think today was an overreaction on the banking side. NBFC's funding costs go down almost immediately. Auto, real estate, and banks all will benefit from this rate cut. And any company with a large loan outstanding, like the very leveraged infrastructure companies, they will also benefit from lower rates. And our thinking is 2 to 3 more rate cuts in the rest of the year.
Mr. Bhagat, thank you so much for joining us. Let me take the next question to you. And given the fact that over the last few trading sessions that we've been thinking about is that most of the event risk is done. You got done with the Trump admin taking over. You had the Federal Reserve decision that is done away with. You had the big budget that's done away with. Now you had the RBI also MPC meet done. Now, do you think that next event that we should watch out for is that Trump meet with the US president, which you did touch upon it a short while ago? Do you think that's a big of an event to watch out for, or you think that now things will go on the way it is? Markets are in a consolidatory phase. All eyes will be only on what FIs do next?
Yeah, to some extent, yes. We are expecting that nothing bad comes out of it. The Japanese Prime Minister meets Mr. Trump today. So we'll get an indication of how things are going. The Israeli PM had a very fruitful meeting with him. So we are expecting that India being the third head of state meeting Mr. Trump, we have got some privileges with him, so we can be optimistic. But, in terms of market moving events with Trump, we are one social media post away from something shaking the markets. That's the part. But the good news is, what is exactly happening? This is an experienced Trump administration which has come in. You have to see on the ground results versus the rhetoric. And what Trump is trying to do, he's trying to grab as much political space as possible before the opposition coalesces together, before court orders come in. We saw that on the funding cuts, where with the first court order of postponement of 3 days, they promptly dropped that. Now, some other moves also have happened. Because of paucity of time, I won't take that. But overall, what are we seeing? We are seeing on one side, Trump will be deregulating. He will bring forward the tax cuts, and he will cut down government wasteful expenditure. On the other side, and all these are good for corporate earnings, and especially financials should do very well. On the other side is the risk of inflation based on a tariff war, which could lead to second order being China depreciating its currency, third order being China dumping its goods all over the world, because China has so much excess capacity, and then you close out a big market like the US with tariffs, it could lead to problems. I don't think any of the worst case scenarios on the cons will happen. There will be via medias found, while on the pro side for the markets, deregulation is happening very fast. He's sacked 16 heads of various regulators, already sent home. Department of Justice, entire prosecution being sent off home. You can expect very fierce deregulation and the tax cuts that Trump has espoused. I think those will get through by June, and markets will react before that. So overall situation is good for the US markets. But it becomes a problem for the Indian markets and emerging markets. Emerging markets have seen about $15 billion go out in the first 5 weeks. US market in comparison has got inflows of 150 billion. So on a base where they got 450 billion in the whole year last year, in just the 5 weeks, they've got 150 billion dollars of inflows. So that is what's happening. Strong dollar, strong US market, strong economy, and strong leadership. The world is gravitating towards that. Emerging markets are seeing outflows. India also, out of that 12, 13 billion EM outflows, India saw 9 billion. So we are getting more than a fair share. But how soon does it reverse? It will reverse when there is some amount of visibility on earnings. The government is tick marking everything. That is very good. RBI did its part. Government did its part. Next week, the tax bill doesn't have any rude surprises. That will be a positive again on Monday. And then the Trump-Modi meet. I think if there is any good outcome from that, that could lead the market finding some stability. But the FI turnaround will come with a weaker dollar. And when the global investors start seeing value in coming to EMs like India, for that we have to deliver on earnings, and or we have to have substantially lower valuations. I would say hopefully earnings start picking up from next quarter, and third quarter calendar year, we see a good boost. And 3 to 6 months before that, markets will start reacting. So I would say April, we should see some amount of FI turnaround happening in India.
Right. Actually, I stand corrected there by mistake. I did say that Trump meeting US President. I didn't mean Mr. Modi meeting the US President. Nevertheless, Mr. Vaga, I got your answer for that. But coming to you, actually, Naresh, and I wanted to get your sense, given the fact that you have this entire rhetoric about tariff now pretty loud and clear. No doubt there is no concrete action about it. But do you think at this time chemicals look good?
So for now, chemicals have been in a downward cycle, apart from, say, SRF and Navin Fluorine, where there are particular cases in that segment. Overall, the trend for an Atul or a Deepak Nitrite or all the other names where there is participation from institutions, they've been in the sideways to a downtrend. Agrochemical side looks more interesting. We've seen UPL, one which finally turned after 5 years. So I would focus more on the agrochem side rather than the core chemicals.
Coming in on some of these chemical counters, but all eyes will be on Eicher Motors as well, because coming Monday we are expecting the numbers to come by, and this time we are expecting a decent set, because firstly, let's give you the volume picture. This time the Royal Enfield volumes has done pretty well for itself. It's been a 19% jump on a YOY basis. That's been driven by a lot of the exports that the company has done, and 13% is what they have recorded in terms of growth number for the domestic market. Other than that, the average selling price is expected to decline a bit because of the higher mix of 350cc models, and the Royal Enfield margins overall are expected to expand just 60 basis points on a sequential basis. When we talk about VECV, then though the revenue is expected to go up, but given the operating deleverage, the PAT is expected to decline on a YOY basis. Talking about the consolidated numbers, 5,044 crores is what we are expecting on the top line. EBITDA expected at 1,291 crores, while the margins expected at 25.6%. And lastly, on the profit figure, our expectation is 1,173 crores. But definitely, all eyes will be on the management commentary, what they actually go ahead and say about the demand outlook and what are their plans for new launches. We'll have our eyes on that. But Naresh, let me have your take on this one. Eicher Motors, how is this technically placed? Because I believe that Kunal has been constructive on this counter in the recent while. But for you, how is the chart looking like?
So the strongest chart in the whole auto pack has been Eicher Motors. First, it did not correct with the whole market. Second was the first one to hit a new all-time high. We saw it drift back to 5,000. Again, went to 55, 5,600, which was the first zone of resistance of the move of the previous range. For now, 5,200 should now act as a base, remains a buy on dips, and the next move could be closer to 6,000.
Move could take it closer to 6,000 odd rupees. Has been consolidating in quite a tight range, and he too likes Eicher Motors on the technical front. But looking at the markets now, it's been a good recovery from the day's lowest point, and just 30 points of cut is what we are seeing on Nifty 50, and even a good recovery when it comes to the banking index. But other than that, it's Ultratech Cement as well that is holding up quite well. And Kunal, before we wrap, help us with your take on the cement major, because of late a lot of these reports are highlighting that in the month of January as well there has been price hikes, and the price hikes are sustaining. That's the big positive. But how do you see the technical setup?
I think it's one of the strongest name from the cement pack, Ultratech Cement. The stock in the last so there are two ways to look at a chart. When you look at this on a relative basis from the recent highs of 12,000 plus levels, the stock is back towards 11,600 mark. So relatively, the stock is more or less 4%, 5% away from its previous highs. And then when we look at this from a bottom-up approach, the stock from 10,500 has recovered more than 10% to rally back to 11,500, 600 plus mark. Which means on both scales, when we look at this comes out to be one of the strongest name from the entire cement pack. And looking at the way the charts have panned out over the last 2 years, my expectation is that Ultratech Cement could continue to outperform and be one of the strongest performer going forward. My expectation is 12,000 to 12,500 range potentially in the next 1 to 3 months.
Right. Like Shrishti marked that there is a marked improvement for the markets from the day's lowest point. Kunal, do you think this is the effect of you flying those paper planes, the picture on your Instagram, that you think it's helped the markets actually lift off?
I think it has.
Given the fact that it's Friday and you had the Friday fever here in the newsroom at least, so hoping that, because we had a very long week, isn't it? Last week was long. This one is feeling longer, isn't it?
Just one holiday, I think Sunday. But
Yes,
then
just
I
one
think no
holiday.
complaints because the markets have done pretty well. So I think
So you don't want this week to end? Is that what you're saying?
if the price recovery is still strong, then of course why not?
Always a bull, isn't it, when it comes into the
Absolutely.
market? Naresh, what's your take? Always a bull in the market?
Always a bull, but I won't like to work on Saturdays.
Mr. Bhagwan, what's your take? Let me take your take also on this, because come next week, it'll be very news heavy, given the fact that you will have the big event where you will have the Indian Prime Minister go ahead and meet the US President. So I'm sure it is going to be an overnight news flow that we'll be watching out for.
Yeah, absolutely. And, it's not only the budget, but the post-budget seminars. So every evening has been talking somewhere or the other. And Sunday I had to go to Delhi for the WOFA 2025. I addressed an audience there of World Forum for Accountants. So it has been a very heavy week. I don't really, and tomorrow we'll be covering the Delhi elections live. So no rest at all. But it is good. At my age, I can't complain. I'm very happy if I get work. As a retired person, I'm happy when I get to work.
All the smiles on the screen is actually the evidence that, okay, we're not complaining except Naresh. Naresh, I have to remind you, you were the one who reminded me last Saturday that next year, February 1st is on a Sunday.
Oh, yes.
Chala, at least I can see that smile on your face right now. But if you look at the markets right now, a good recovery, smiles on everyone's faces. Yes, it's been a very long and a tiring week, especially for Shrishti, given the fact the auto numbers have been pouring in thick and fast this week.
Well, certainly, Cheryl, and looking for Monday as well. But nevertheless, the markets have been kind, really. It's been news heavy. The earnings season was in full swing. But I believe that we are ending the day on a good note, because the policy is through, and next week there are a lot of triggers to watch out for. But quickly, let's before we wrap this session, let's tell you or highlight some of the gainers that we are seeing at this point in time. Definitely the metal counters are doing pretty well for themselves. We'll definitely watch out for that. How we can actually go ahead and see this momentum continuing. But this week, the chatter has all been about the consumption basket, given the kind of over 1 lakh crore of booster from the union budget announcements. When the consumption is to be pushed, in terms of the tax cut for the middlemen is what we have seen. Let's hear out from Manish Suntalia's view on the consumption basket.
Key takeaway from the budget is consumption. So at the margin, consumption stocks are going to do really well, because first of all, you are coming out of the budget, with very little expectation, given that consumption stocks have not done well over some time. So, this 1 lakh crore saving in income tax, and if you give it a marginal propensity to save of around 20%, that is marginal propensity to consume of around 80%, then this 1 lakh crore saving in taxes will actually mean a multiplier of 5. If you assume that of that 1 lakh crore, 20% is going to be saved and 80% is going to be spent. So depending on what is the rate of savings, the multiplier could be as high as 3 lakh, 4 lakh or 5 lakh crore. If the saving is 20%, then it's 5 lakh crores. If it's 25%, then 4 lakh crores. If it's 33%, it's 3 lakh. So this is basically going to be felt on consumption-related stocks. And mind you, the consumer discretionary names are going to benefit more, since the tax cut has happened on the corporate income tax side, not the GST side.
All right, then, as we wind down for trade this Friday, let me come to you, Kunal, and get your BTST ideas that our viewers can watch out for.
I'll look at two financial names. First one is from the mid-cap arena. It's about Ujjivan Small Finance Bank. That's a chart which is looking extremely attractive. Would look out for targets in the range of 44. Stop loss could be now trailed to 37 since the stock has moved up higher. IndusInd Bank is the other stock which is looking extremely attractive and looking out for targets in the range of 1100. Stop loss at 1060.
All right, so those are the two BTST ideas coming in from Kunal. But Naresh, what about you?
Buy and a sell, buy on Bharti. The stock is broken out post numbers. Looks interesting again for a follow-up move to 1700, 1720. Stop loss at 1650. Second is a sell on Marico after a strong recovery has given a breakdown. Stop loss at 650, target price of 635.
A sell call actually coming in from Naresh. On that note, thank you, Mr. Bagga, as well as Naresh and Kanal for being a part of the show. We'll see all of you next week. Yes, it's going to be a good working 5-day working week for all of us. But let's take a look at what the markets are doing and where we are shutting shop for the trade today. Yeah, like Shrishti said, yes, at the off the day's lowest point, significantly off the day's lowest point when it comes to the benchmark indices. Nifty Bank also seeing a tad bit of cut, but nothing to be too perturbed about. Let's take a look at what the broader markets are doing, because the picture there is pretty mixed when you compare to the mid cap and the small cap index, because mid cap index is shutting shop with a cut above 0.4%. Small cap is shutting shop with a cut of about 0.4%, while you have the mid cap index in the positive territory. It's a very stark different move coming in from the broader markets in trade today. Some of the counters that were actually moving in trade today: Bharti Airtel, one of the top performers in trade today on back of its earnings. Post the con call commentary, you saw a tad bit of downtick on the company, on the stock price, but nevertheless holding on to gains about 3.5%. NCC, that was the one that got hammered out of shape on back of its earnings. Remember, the operating performance for this one was not that enthusing. Let's take a look at Aurobindo Pharma, another one that came out with its earnings yesterday post-market hours, and that one has given up all of its morning gains. But banks were the ones where a lot of favor was in, given the fact that you had the RBI that went on with a 25 basis rate cut. So take a look at the housing finance companies, LIC Housing Finance, Canfin Homes, what they're doing in trade today and how they are actually shutting shop pretty flat in trade. Also the auto companies, because remember, interest rate sensitives also benefit when there is a rate cut. So take a look at what the auto index is doing, or for the matter of fact, realty index, because that's among the top performers in the trading session in today's. That's actually given up all of its gain and in the negative territory. But yes, the move today, Shrishti, has been pretty choppy. But yeah, we're ending the week okayish.
I think, Cheryl, yes, like you rightly said, nothing to be perturbed about, and it's been a decent week for the markets. We should mark all of those things as well. But definitely, for now, we are completely out of time. It's a goodbye from me and Cheryl and the entire team who put the show together. Thanks so much for tuning in, viewers, and we'll see you next week.